Alright, what's going on, guys? Bit Dealer here, bring you a new strategy video. So today I'm going to be covering candle closes and how I use them in my trading strategies, and just go about all different kinds of tactics and just how I implement them into my strategy. So you've probably heard me mention this tons of times, and you've seen me post it in the group and on Twitter and all that, I'm sure, a million times by now. So you've probably already seen a lot of this, but I figured it would be a good idea just to get it in one video instead of have it scattered out everywhere throughout the journal and whatnot. So anyways, hope you guys enjoy this video, and let's go ahead and hop into it. So just a quick overview. An important aspect of my trading system is using candle closes for confirmation and trade management, and really just reducing overall risk, because with these candle closes and how I use them, you can basically reduce risk by only taking trades that you get confirmation that price is going to head in a certain direction, which obviously confirmation in trading isn't a 100% guaranteed thing, but any added probability or odds that we can get in our favor is always a plus. And also with the trade management, it allows you to exit early and just overall reduce risk and try not to lose a full 1R loss or whatever. So let's go ahead and just hop into the other slides. So the first one we have here, and the first thing that we're going to discuss, is candle closes at SR, at support and resistance. So pretty much when price is coming into a level, it's either going to do two things. It's going to reverse, or it's going to break that level and continue on in the direction that it was going. So right here we have reversals. So at support, on our retest, we want to see price push lower than that support level, but ultimately get pushed back up for the close, and close above it. This is typically confirmation that price was going to go higher. So as you can see here, we have a drop in price, form a support level. You rally off the support level, and I got that support level off of this lowest close right here. Price comes back down to retest it, and here you can see we have 1, 2, 3 different times that price, I guess you could honestly count this huge wick too. That is one ugly candle though. But 3 or 4 times that price pushes below that support level. Bulls fought, pushed it back up for that close, and then sent it up. Basically pumped it and strong move away. So as you can see, we had the 1, 2, 3, and price does test it here, just as tapping on that level. But I always just like to see price go below my support level and close above it instead of just tapping onto it, because that basically what it's showing me is that buying pressure down here, buying interest, and bulls overall are strong enough to defend that level, even though it's been pushed pretty far below it. That just shows me that bulls are strong at this area. And then the opposite for resistance, on a retest, we want to see price push higher than that resistance level, but then get pushed back below it and close down there. So this is typically confirmation that it's going to go lower. And as you can see, we have a price rally using this highest close right here as resistance. He sells off a little bit, comes back, tests it as resistance, pushes higher with that wick, ultimately gets sold off a little bit, closes below that level, and then just sells off hard. So all it took was one push above it, and then closed below it, and then it dumped hard. So hope that makes sense on these reversals. Obviously, what I mean by a reversal, price comes into this level, stops, and reverses to the opposite direction. Should be pretty clear on that. So this is also at SR, and how I deal with closes here. This is just going over basically market structure shifts and continuation patterns. So for bullish continuation, here's the first example. As you can see, we have a resistance level, which I just got this from a high over here. I just didn't have enough room to grab that whole screenshot, so I got this resistance level from a high. So as you can see, price uses this level as resistance on this first and second candle. You see it pushed above resistance, close below it, push above resistance, close below it, Then on this third candle here, number 2, or number 2 right here, it pushes higher above this resistance level and closes above it. So that shifts market structure right there, because as I said earlier, I got a high. I marked a high, which is this resistance level. So we broke this high, closed above it, sets a higher high, shifts market structure to bullish market structure. And then as you can see on 3 down here, it retests that support, wicks under. As you can see, it wicks under here, but holds it and closes above that. And then we get continuation to the upside. I kind of put 3 and 4 as 2 different things, but really it's right here. Price just retests this level as support now. It also pushes below it and closes above it. So what this tells me is that buyers are strong enough to hold that level now, shows enough buying interest, and you can expect price to continue to the upside. And it's the opposite for a bearish continuation. We have this support level. I got it from a low, just like I got this from a high. I just could not fit it all on this screen here, so I got it from a low. Price pushes down, uses it as support. As you can see, it pushes lower and gets bought back up and closes above support. Then on this second candle right here, it closes below that support level, so that shifts market structure there, because we got this support level from a low. So we set a lower low, setting bearish market structure now. Excuse me. And you can see price comes up, retests this level as resistance, wicks above it here and closes below it. If you can see that on 3 and 4, it's kind of just on this candle here. And then number 5, we just get continuation to the downside. So that's pretty much it on the continuation patterns. Let's go ahead and cover how I handle candle closes at supply and demand zones. So what we want to see when price approaches these supply and demand zones is we want to see price tap into, for example, the supply zone and close below it for confirmation of more downside. So as you can see, we have a supply zone here. Price comes up, pushes into the supply zone, and closes below it. That would be a short entry trigger. And you just enter here, and basically what this is telling me is that the sell pressure and unfilled orders here are going to be strong enough to send price lower, because the fact that we could not even close near this zone. We pushed up, immediately closed below it, went back for one push, got rejected really hard, and then that's just showing me that price is weak and that it's going to get sold off. And it's the opposite for demand. You want to see price tap into the demand zone and close above it for confirmation of more upside. So you can see we have this demand zone here. Price pushes up, a strong move away, comes back down, and look how clean this is. You get 1, 2, 3, 4, 5 tests of this zone, and they all close cleanly above the top level of this zone. So that's confirmation that price is going to go higher. So here you could have entered on this close. As soon as price tapped into it, closed above it, you could have entered along, and you would have had very little drawdown on this trade. If your stop was down here, just that little wick there, and then price rallies hard away from here. So pretty simple stuff, guys. Like I said earlier, if you probably see me do this stuff every single day and talk about it in all of my videos. So yeah. So here we have just failures and supply and demand zones just failing, basically. A few signs of a fail or a failure basically is a candle close inside of a zone. This is hinting at the zone is going to fail, and basically what it's telling you is that you do not want to enter here, but if you already did enter earlier, this is allowing you a chance to exit, or just reduce risk, reduce size, position size, whatever you want to do, really. I try to leave trade management up to you guys a little bit, because I don't want to be responsible for trying to tell you how to just manage trades. There's a lot that comes with it, and it's really personal and up to your your individual strategy. So But yeah, like I said, candle closes inside of zones hint at the zone failing. With these early signs, you can do two things. Basically, skip out on a risky trade, or you can exit early to reduce risk. So here on this first example, you can see that price taps into the supply zone. You might have entered a short here, and then you see price comes back up and then closes inside the zone. So that is basically an early sign of the zone failing. It's basically saying that price is not, sell pressure from the zone is not strong enough to reject it here. So it starts closing above and inside the zone. And as you can see, we get quite a few more. You get 1, 2, 3, 4, 5. And I put with all these closes inside the zone, you want to skip the trade and wait for signs of weakness below. So what I mean by that is if you're not already in a trade, I would not look to enter after you get so many closes in this zone. Or if you exited early from, right here, you want to wait until you see price come back down, retest it, on the underside and show weakness before you got back in. And as you can see, you would have got stopped out on the short if you would have just entered here and just let it go, didn't manage it at all. And it showed, clear signs that it was going to fail by 1, 2, 3, 4, 5 closes inside the zone before it finally broke the zone, closed above it, set that higher high, and then, kind of went higher here. So this is a example of a demand zone. And basically, I had this clear demand zone, price pushed away really hard with a strong, move away. And then on the retest, price closes right below the demand zone. So it says closing below demand equals skip trade and expect more downside. So this is one reason why I don't like to leave limit orders at these levels because of examples like this. It looks like a clear demand zone, but price just closes and pushes straight through it. So to avoid just getting stopped out or immediately in an underwater position, that's why I like to wait to see how price reacts to this or any of my levels or supply and demand zones, and then get a few candle closes around there, and we'll see from there. So that's a good example of that and why you should just wait to see how price reacts to a level, because you don't want to just get blown through here. Like if you set a limit order here, a stop here, under the zone or down here, and you went out, to do whatever, you weren't looking at your exchange or your computer, and basically just get stopped, or you get filled and stopped out in the same candle, and that's no fun. You can avoid that. You can easily avoid that. You might not always get the highest risk to reward trades because you don't always get to buy or sell, the top or bottom, because you're waiting for that reaction. You might get in a little bit later, but it ultimately saves you from just getting blown out through these trades. So trade management examples. So I have some examples here I'll show you in 1 second, but basically it's pretty simple. For longs, if you are long off demand or a support level, you want to, if you get a close below your support level, you want to exit your long. Basically pretty simple. You have to be careful of false breaks, but over time, with experience and actually looking for these things, you'll be able to tell pretty quickly. And I can actually link you a great resource for false breaks, false highs, all of that. So I'll try to remember to do that because I didn't really mention it in here at all. But close below support, you want to exit your long. Close inside of your demand zone, you want to exit your long. So for shorts, close above resistance, you close your short. Close inside your supply zone, you want to exit your short. Pretty simple stuff. But here are just some examples. So here we have a range, have a high, have a low. These interacted with the mid-range, price pushes up a little bit, comes back down, SFP is this range low. Enter at the close, stop below. You could put your stop below this right here, but with such a small wick and this clear swing low, I would just typically put my stop below the swing low for more protection, not such a tight stop. So you can see enter here, price rallies a little bit, gets rejected, and as soon as we close below this range, that's a sign, that's an early exit sign, because price closes below the range, you're expecting more downside. And you can see as soon as we close below this, a small short-lived rally, and then price just dumps and takes out that swing low. We would have got stopped out. So you stopped out here for probably like a $50 or so, or like 30 something bucks, versus way down here. So you basically just took a way smaller loss than you would have if you weren't using these candle closes as early signs of weakness. So that's how I would approach this on the range sweeps that I trade. And then here we have on a supply zone, the origin of this big sell-off. Price comes up, tests this zone here 2 times, and I just put the entry here. Typically I don't leave my limit orders there, so I wouldn't really enter here, I guess, but yeah, just for this example anyways, enter here at the supply zone, stop above the swing high. Price comes back up, tests the zone, closes below it, and then price just shoots through the supply zone and closes up here. So you still wouldn't have got stopped out yet. It's basically just closing through supply signals early warning sign, look to exit. So you could exit here on the close, or you could wait for price to pull back a little bit and then exit down here for a smaller loss. But either way, you're still reducing that loss and not taking on a full 1 hour loss or whatever. Obviously see here you would have got stopped out. So let's see, those are pretty much the examples of all the trade management examples that I have. And then here we can go ahead and go over this example. So here I just put a candle closes guide. It's just a short like a compact example of a few different ways I use candle closes. And it doesn't cover everything that I put in this video, but it does cover a lot of it, and it's all in one area of price. So I thought that was pretty interesting. So we can just start up here. At demand, you want to see a tap into the zone and close above it, and that's number 1. As you can see here, we have this demand zone. Price taps into demand and closes above the zone. This is confirmation that price wants to go higher. So what did price do? Tapped into the zone, closed above it, price goes higher, right? Here we have at supply, tap in the zone and close below it, number 2. So here's number 2 up here. So as you can see, we have a supply zone, price taps into the supply zone and closes below the zone. This is confirmation that price wants to go lower. Closes down here, what does price do? It goes lower. Here we have at support, push below but close above on number 3. So you can see we have this daily support using this close here. And here's number 3. It says on a test of support, price pushes below the level but continues to close above it. This is confirmation that price wants to go higher. So you get this push below, close above, push below, close above, push below, close above, and then again here. So that's 1, 2, 3, 4 different times the price pushes below a support level, but the buy pressure is strong enough to push back above that level and close and send price higher. So here we have at resistance, push above but close below on number 4. So you can see we have this resistance level, this close here. Price pushes up into it, takes out this high, and closes back below this resistance level. So on a test of resistance, price pushes above the level but continues to close below it. This is confirmation that it wants to go lower. So I'm pretty much just repeating this stuff over and over again, but it's pretty simple but very effective stuff. And then you can see we have these are like the failures or just the bad examples. So at demand, tap into the zone and close inside or below it. So here at number 5, see we have this demand zone. Price rallies away from it. This isn't the best example of this, but it, like I said, this was all in one area of price. So the fact that all these examples were here, kind of just have to work with what I can. But price pushes away, especially on a daily time frame, you would expect a bounce from here. But what does it do? Price just comes down, closes straight below the zone, and kind of, doesn't really bounce here. It's just chopping around. And then, so that would have saved you from, taking a shitty trade, because waiting on this close below the zone and you wouldn't have entered at all. So at supply, you tap into zone. You want to see a tap into the zone and close inside or above it. And I said you don't want to see price tap into a zone and close inside or above it. So you see number 6 here had the supply zone, and you can see price pushed up a strong green candle, closes right above that supply zone. It says price pushes into supply but closes at the very top of the zone. This is not the kind of reaction and close you want to see. And what does price do? It starts going a little bit higher and comes all the way up here. So at support, you don't want to see a close below. That will shift market structure to bearish market structure. So we have number 7 here. We have this low, this close, right? Lowest close here. Price comes and closes below it. Price closes below support. This shifts market structure and should flip your bias. So you should be bearish now that you have a lower low. Lows are getting broken. You want to look for shorts. So what does price do? Come back up, rally, and then go lower. And finally, the last one we have at resistance, a close above will shift market structure. Number 8. So we have this close here, right? This resistance level. Price comes up, uses it as a resistance, then pushes higher, closes above it. Price closes above resistance. This shifts market structure and should flip your bias. And what does price do? It rallies hard. So I hope you guys enjoyed this video. It's probably a little bit shorter than my other strategy videos, but there really isn't like a ton to go over with candle closes. Everybody knows what they are. They're no secret. It's just kind of how you use them, and really they're a great tactic or thing to implement into your strategy. Like I said, it basically just helps you get more confirmation before entering positions, or even if you're already in position, still getting that added confirmation just builds up your confidence and reduces stress while you're in a trade. And also it will just reduce the risk overall, because you can avoid taking trades that have no confirmation, and you can exit early and take a smaller loss than a full loss on zones or levels that are going to fail. And this is all just off basic closes. So I hope you guys enjoyed this video. If you have any more questions on candle closes, or obviously anything at all, you can just message me on Discord. But yeah, I will include these slides and all of these chart examples in with the video link. So yeah, hope you guys enjoyed this, and I'll see you guys next time.